Hi, I'm Kevin Dreyer. I'm Co-CIO of the value team here at GAMCO, and today I'm going to be speaking with my colleague Simon Wong. He's our analyst who follows energy and natural resources companies here at GAMCO. We're going to be talking about a company called Dril-Quip, ticker DRQ, and it's a good illustration of how we at GAMCO stand up for shareholders on behalf of our clients. So, first of all, Simon, what is Dril-Quip? Can you just tell me a little bit about the company?
Sure. Dril-Quip is a subsea equipment manufacturer. They're based in Houston, Texas. The company has about 35 million shares, traded about $15, $525 million market cap, $190 million in net cash, for $335 million total enterprise value.
Great. So back in March, the company announced that it intends to merge with a private company called Innovex. And I know we have some issues with the terms of the deal, but just from a strategic standpoint, why do you think that this deal might not be in the best interests of shareholders?
Sure. Well, Dril-Quip business is mostly focused on international land and offshore, whereas Innovex business is more focused on U.S. land. We see more growth offshore than U.S. land. We believe U.S. land has peaked and there's lower activity. So by merging with Innovex, without losing the most attractive part of Dril-Quip business.
Right. And also, with the $190 million of cash at Dril-Quip, after the merger, that's going to be a lot less, going forward, which is not great for shareholders either. Right?
That's correct. Innovex will be bringing over about $125 million of net debt. So the combined company will only have $65 million of net debt, and Dril-Quip requires at least $100 million to run this business.
Gotcha. Then when we're looking at the deal, can you talk a little bit about how Dril-Quip is actually issuing shares and how that relates to our current views on Dril-Quip's valuation?
Sure. Dril-Quip is trading about 4 times EBITDA currently, and business will continue to improve. Stock of $15, it hasn't been this low in quite a while. We had to go back to the early 2000 for the stock price, to see a stock price this low. So Dril-Quip is issuing stock at basically the low point where we think the company is worth a lot more.
Yeah, and 33 million shares. So
33 million shares.
Almost half the company. And as a rule, you want to sell stock when you're trading richly and not when you're trading cheaply. You want to buy it back, actually. So now Dril-Quip is kind of making it sound from some of the releases like they're buying Innovex, but really, if you look at the deal between the share issuance and their proposed board composition after closing, it really seems more like Innovex is taking over Dril-Quip. Isn't that the case? Who's going to be running the company afterwards?
That's exactly true. It is structured as a 50-50 merger equal, or near 50-50 merger equal. But Innovex's CEO and CFO will be running the company. If you look at the board directive of the combined company, Amberjack, which owns Innovex, Amberjack and Innovex will control the board with 5 of the 9 directors. So even though it's structured as if Dril-Quip is buying Innovex, really Innovex is buying Dril-Quip while paying control premium.
Right. Now, obviously, we follow M&A a lot here. It's often a catalyst that can surface value in our stocks. If Innovex and Amberjack want Dril-Quip so bad, why don't they just pay a 30 to 50% premium like we would typically see when there's a takeover?
I don't know, Kevin. That's a really good question for the board directors at Dril-Quip, but it just shows you that this is a not good deal for Dril-Quip shareholders.
Great. Well, thank you, Simon. I think this conversation is a good summary of our position on Dril-Quip's proposed merger with Innovex and why we're voting against it. For any more information, I'd point you to our press releases on this matter. We've also issued a letter to the board of directors of Dril-Quip as part of our 13D filing. Thank you.